everybody, to a new episode of DevOps Breakfast. I'm Gina Smith.
I'm Michael Araneta, and what a day it has been. We are recording this on the day that IBM split its company into two, or made announcements that it was planning to split its company into two.
Really, literally just a few hours ago, IBM, I can't believe it didn't leak out before this, but IBM announced it was splitting in half. It's going to just focus on cloud and AI, where I guess it's where the money is, right? Where the revenue really was last quarter, and rolling away its historic business, the managed hardware and stuff. We're going to be talking about this for a long time.
This is worth 3 episodes, 1 episode more than the 2 entities that we eventually will end up with. And a lot of implications, obviously, impact to its partners, impact to its business as a whole, but also impact to its customers. And I think no better person to speak to today than Linus Lai.
Yeah, Linus Lai is a vice president covering services here at IDC, and he can talk to us about that, and we'll wait for him to join us now. I'll tell you where another part of the impact is Wall Street. Right after this was announced, IBM stock was up about 8%, and just now when I looked at it, it was up 11%. And so Wall Street likes the idea of IBM competing more firmly, I guess, in the cloud sector with Amazon and Google and Microsoft.
Yeah, and obviously many of the considerations will also be talking about specific segments that IBM was going into, particularly around that of AI, and segments that AI was supposed to support, especially on the use cases for specific industries. That would be quite an interesting thing to discuss too.
Yeah, IBM, it was Arvind Krishna this morning said something very interesting, and that was that he was looking at hybrid multi-cloud and AI as a $1 trillion business. And so he's cutting that pie in a very interesting way. You know, we talk a lot about the hybrid multi-cloud, but to combine those two, it really is about AI managed data and all of that for your customers.
Yeah, and just as a tentative view of how the business could be split, you've got the IBM hybrid cloud and AI company that Gina was talking about, technology and platform innovation, some of the work that they're doing in terms of pursuing new markets, especially around that of digital transformation in the bigger original IBM company, and the managed infrastructure services company at under 20 billion in terms of revenue. Looking at IT infrastructure modernization, maybe some of the migration towards this hybrid cloud type of future will also come from this new co that IBM for now is working with in terms of taxonomy.
Yeah, and think about the red tape here, right? I mean, these are 2 public companies. I mean, no wonder it's going to take them an entire year to close this. I think closing the Red Hat deal, the $34 billion deal, was probably easier than doing 2 IBMs.
That's right. And I think that they've got some good experience now with this Red Hat acquisition. Obviously, as different cultures really had to be integrated, or were they integrated at all? But so far, it has been a experience for both IBM and Red Hat in trying to find ways to work together.
Let's talk about the implications. Linus Lai joins us now. Hey, Linus.
Hello.
What a morning it's been.
Gina.
Hi, Linus. And I'm amazed. I was just telling Michael, I can't believe this didn't leak out in any way. I mean, they really kept the lid on this IBM news right until just a few hours ago.
But in terms of shock factor, Linus, I mean, how surprising was this for you?
Well, look, there was always rumors sort of circulating around town that, IBM was going to do something major, right, for the longest time. So finally, when it happened, I think it was actually quite a shock, because it was like, oh my gosh, this is happening, right? And in the way that it happened as well, to split the company into 2 was easily, I think, one of the major news announcements we saw this year.
Did you think that Red Hat was the big news that IBM was supposed to announce, obviously, and now that it's done, then yeah, IBM could keep to its own momentum. But this was, in fact, the bigger news.
Yeah, no, I think Red Hat was actually part of that strategy to move to obviously a hybrid multi-cloud world, right, and to offer the platform services to allow that to happen. And I think that was just a stepping block, in allowing this to happen for sure. I think there's a little bit in this for everyone. There's a little bit in this for shareholders. There's a little bit in this for customers. There's a little bit in this for even IBM employees themselves. But it was truly, it was definitely quite a shock, because I was talking to some IBMers today. They heard it the same time as we heard it.
Yeah. They didn't see it coming. When we had right after the Red Hat purchase, 8 months ago or 9 months ago, all the Red Hat people were sharing, like, where were you when you heard about IBM buying us? And I imagine IBMers will be talking about this for a long time too. And Wall Street loved it. 8%, the stock was up 8% on the announcement, and I just checked, and it's 11% up. That's huge for IBM. So just not even talking about technology, it's an enormous deal.
Yes. It's amazing because, like I said, there's a little bit in it for everyone. And this, because it's such a significant development, and I would say easily ranks right in one of the top announcements this year, to be able to separate, the company into two. And the way that they've positioned it is that it's good for both companies. But if you think about what HPE did many years ago, there's always going to be, the talk about, is there a growth company and is there a sunset business as well, right? Because there's a traditional outsourcing versus, what is essentially a very different business when it comes to multi-cloud and hybrid cloud sourcing.
That's what
Interesting
Arvind Krishna
too,
said. I'm sorry, that's what Arvind Krishna said. We're going to focus on the high growth company, but really the one actually making money, the most money, probably is that managed service company. $20 billion is huge for a spinoff.
And that seemed to be the precedent that has been set by HPE and HP Inc. as well, right? I mean, we were thinking for quite some time that there was going to be a sunset company between these two, but it turns out that both of them are growing.
Correct. But as you recall, after they split HPE and HP Inc., then HPE did another split, and actually did two splits. One was with the software and one was with the services. So the services, the traditional outsourcing, went to CSC to become what is now DXC, right? And if you look at the new CEO for DXC, essentially they are now doubling down and focusing more on the outsourcing and managed services business, because that's where the enterprise class value that is derived for their clients.
Yeah. My question is, will this really edge IBM ahead cloud-wise? When you look at Amazon with 30% of the market or something, and then Microsoft, and then Google, and then IBM trailing up. It's weird to say IBM is the small guy there, but does this give IBM a big thrust forward?
Yeah, we used to think, it was that $100 billion company, right? So, this is one way to make a $100 billion company smaller for sure.
Yeah, that's true.
Yeah.
And let's talk about the big opportunities that they are pursuing moving forward. If you've got the IBM entity that will focus on digital platforms, cloud, and AI, are they going to grow significantly after this, now that they're a lot more focused? And what is the projection for how much growth we are expecting from this company?
Yeah, so before I go into that crystal ball of mine, I want to say that, yes, if you look at the way that the announcement has been crafted, the cloud assets, the AI assets, the multi-cloud, and where Red Hat sits as well is going to be pretty much where the growth is going to happen, right? And that's essentially tracking again to where customers see they're going to put a lot of their infrastructure and resources on as well. So I do expect it to be higher growth than what the whole of IBM would look like. There are some questions, and of course it'll be a couple of points higher, but there are some questions as well lingering, which I think we'll get more details, over the next few days. So knowing how the new, IBM will drive multi-cloud and hybrid cloud, I suspect that there might be some overlap as well with what the new co will be doing in multi-cloud management as part of their outsourcing contracts. So from a platform perspective, from a hybrid multi-cloud platform perspective, I can already see some overlap, right, in terms of services. And then for the new co, will the new co also drive, what's the relationship going to look like? Are they going to, have a licensing agreement with Red Hat? Are they just like every other SI and outsourcer? Are they going to have a licensing agreement for Watson, just like every other SI, global SI, and outsourcer as well? And
Aren't
then
these all questions anyway, Linus, though, with the Red Hat purchase and Red Hat like firmly asserting, Red Hat is still Red Hat.
Correct.
Look at the
correct.
numbers, $18.1 billion, right, for the second quarter, and IBM was down 5%. But if you just looked at cloud, it was up 30%, or up to 6.3 billion, and Red Hat revenue spiked too. And maybe they just saw the numbers and said, we'll explain it later.
Yeah. No, I think it's good that if IBM can come clean on some of the most important details to the market and to customers and to the industry as well, because I recall during the Red Hat acquisition, the most important question to be answered was, are you going to leave Red Hat alone? Because it was a culture thing, the industry customers were concerned that if IBM subsumes Red Hat in the wrong way, the culture would die out as well. And thank goodness IBM made the decision not to do anything with the Red Hat culture. So I think very similarly here, there are going to be some big questions from customers as well. And, the big question is, how are they going to drive, the differences between the two organizations? And if I'm reading in between the lines, because of the higher cost base for NewCo and the much more agile and lean IBM in what is now IBM, to do what they need to do and obviously compete in the market at a scale that affords them price advantages as well, then they'll need to start acting a lot more nimble and agile as well. Somewhat like a cloud services provider, if you like, even, right? So how's IBM going to do that? I think that's a big question to be asked as well.
The joke online was that they're now misnamed, and the NewCo is what they should call IBM, and what's left of IBM, the cloud and AI thing, they should just call it Red Hat, and that's it. Right back to where it is. I'm interested in what financial services are going to say, are going to react. I wonder how they would be with Red Hat anyway, like using open source and these traditional banking.
I just looked at the numbers that we had. IBM would probably be at about 25% of its revenue, well, at least its current revenue in BFSI. That includes banks, insurance, as well as capital markets. So 25%, a big number. And some of the initial reaction from the field would say that the banks are pretty much open to this idea, particularly because they had to explain to the regulators, the central banks, what impact IBM has for its business. So this actually is a vendor risk management opportunity. Banks were being asked about who were their most critical vendors. IBM would be one of them. And now that it's been split into two, then they have a better way of explaining this vendor risk and exposure to one particular vendor that would be very critical for the enterprise.
Do people have to choose? I mean, we were talking about this earlier, Michael. Like, say you're a company and you have some managed, you use IBM's managed services. Maybe you also use IBM Cloud, and then you've got Red Hat or maybe Google or AWS. I mean, do you suddenly have to say?
Now you don't have to choose, because these are separately managed organizations, and therefore vendor risk concentration would be minimized because of this.
I guess I meant, does IBM have to choose, right? Does it have to take its customers, and I said that backwards, and split them down the middle? I mean, maybe they're already doing that to some degree, right?
Yeah. But it will be down to the partnerships and this collaboration that Linus was talking about. How are they going to go to market together? And in terms of this conflicting services and products, how are they going to work out what is ultimately good for the customer?
Yeah, that's true. Now, of course, I can imagine from being in a bank as well, you have to start to drop some new contracts as well with both companies.
Mm.
Mm.
Because there's not endless money, right? You can't just say, oh, well, then, this IBM money, now we're going to pay 2 giant contracting companies, plus Google, plus Microsoft, plus AWS. It strikes me somebody's got to fall on the floor. But, I guess.
The banks are at least welcoming this initially as a reaction to this. And obviously, this allows them to also look at what is the direction of this new organization. Is this going to be a better version of what I'm doing with my managed infrastructure services? And that might, in fact, be a good discussion to have.
One thing to remind everybody, this certainly isn't the first time this has happened. I remember when IBM spun off its PC business, and it was shocking. Really? IBM's not going to make PCs, and it's going to spin off, its hardware business. And they've done this in other sectors before. This is old hat, right, for them.
And networking as well, obviously, there has been a lot of experience in IBM in trying to transform itself. This might be just one of them.
Oh, yeah, for sure.
It's interesting how you say financial services welcomes it, and maybe the ones who don't welcome it as much are the ones outside of that sector. Financial services have the budget, and they're able to, this makes it very clear to us. And I'm on an IT WhatsApp group, and I asked them about this morning. What do you think? And everybody's like, more red tape, more bureaucracy. But yet financial services loves it.
That's right. Yes.
Well, I think actually it simplifies things a lot for customers, and I think that's why customers are welcoming it as well. Because, just by coincidence, I was reading up on Conway's law, and if you don't know it, you can look it up on the internet yesterday. And Conway's law basically states that organizations, design or systems design or even services design, all right, mirror their own communication structure, their own organization structure. And for many years now, I think about the last 2 or 3 years in our services sourcing research that we run every year, customer centricity was the top ranked criteria when choosing a services provider. And the criticism of large organizations like IBM was that, if they wanted something, all right, and if they wanted to drive an outcome, for example, as a service or subscription outcome for a particular, say, desktop service, right, you'd have to, firstly send a request out to the organization like IBM, and then IBM would mirror its own organizational structure and communication structure in delivering the as-a-service outcome, which by the time you add on all of the layers of GTS and GBS and strategic outsourcing, et cetera, you'll get a solution that's not really fit for purpose and not really has the customer's best interest at heart, but again mirrors the vendor's communication and organization structure as opposed to being customer centric.
So that is like HPE then. That is just the same thing that drove HPE.
Correct. That was a major criticism of service providers in general, right? When we ran our research over the last 2 years. So anything that bodes well in this announcement that helps to deal with the simplicity of dealing with a company like that, I think would do well for customers.
So this is an opportunity to create new laws for IBM to simplify things for everyone.
Absolutely.
Who are the losers here? Like, you can see, okay, customers win because it's simpler, right? IBM wins for sure because it has an easier story. But who loses? Is Amazon? Do they care? Does Google care? Does Microsoft care? Or is this just noise in the background and they're already taking off so much?
So I think the loser is the old IBM brand, right? Because you would think that this is the big, you don't have a big story anymore in technology, or hardly that IBM brand would not exist for long, right? So it's you know, you can take a look at this and say, yeah, this is probably emblematic of old times.
Yeah, I agree with that. We'll look back at this and say that this is the time that IBM decided to do this. And I was thinking about it also earlier today, and I was thinking it's a gutsy move. It's a risky move as well for IBM to do so, because obviously, in order to drive, the promises and expectations for IBM, the new IBM, right? You've got to, like I said, be a lot more leaner, agile, and drive a lot more efficiencies in the way that you deliver the services, and allow automation and platforms to take over as well. So it's not just here's where you park these assets and here's where you park those assets. It's to do with the culture that needs, and the people as well, that needs to change as well. So I think that's the risky part of this announcement, because what you might end up with is a bifurcation of the IBM culture into two organizations now, right?
Right.
And when you asked about losers as well, if you take a look at the general services sourcing landscape, you've got the big four, you've got the accounting-based consulting firms, you've got the global SIs like IBM, Accenture, DXC, etc. You've got the global Indian-based services integrators.
Yes.
Correct. And then you've got pretty much everyone else, right? Even, and they can be very large themselves in their own right. And I think if IBM executes well, they'll be able to deliver much, much more competition to the global services integrators, especially those from India Inc.
It is a gutsy move, especially from a new CEO. Arvind Krishna just took over in April, and everybody expected him to shake things up, but I didn't see this coming. I mean, I guess looking in the future, now that we've seen this, it's easy to predict they could spin off still AI, because it makes a lot of sense to have Watson be its own, operation, separate from the hybrid multi-cloud. But then,
that could happen, but historically, IBM is more adept to spin off what I would term as legacy assets. So a lot of the software assets are now being spun off to HCL, and those are not really that strategic to IBM at this point in time compared to where AI is.
and the timing was good. I guess it was just a few days ago they pre-announced their third quarter results, and they were ahead of what they had predicted. I think it was 17.6 billion instead of 17.5. Lastly, I can't believe we didn't talk about this initially, the whole digital transformation thing. I thought Arvind Krishna made a very interesting comment. He said March, April, our customers were freaking out, and they were, they closing the door on all the cash. And then they realized, okay, this isn't for a couple of months. It's going on and on. And now customers are rethinking their digital transformation objectives and turning back on the lights. And so he said, he's going to say this, but he said, when is a better time to do this than when everybody is racing forward, really, with their digitization plans?
Yes, that's so true, isn't it?
It is true. I mean, at first I wanted to be and say, oh, well, what's he going to say? But really, that rings true. You can see that it starts to make a lot of sense, where what's a better time than now to go to these customers and say, okay, time to put everything on the cloud. Half your workloads are there. Let's do the other half while everybody's working at home. And, you're really pushed to do this, especially the banks, right, Michael? I mean, they really have
especially the banks. But I think what this has taught me is that 2020 has been a very interesting year that's making us a lot more gutsy. IBM not exempt from that trend.
Absolutely.
No hindsight 2020 for 2020. Oh, that's a bad joke. I can't have been the first one. We're going to keep talking about this for sure. I'm sure this is going to be a topic we're going to be reviewing over and over for the next 12 months while this gets approved. and everything. Do you have any final words, Linus? Anything that
No, I'd like to echo what Michael said. We'll look back at 2020 and then we'll see that, this was actually the year that made it all possible, In Asia particularly, just for an example, most enterprises said we couldn't, rely on everyone working on home. Why would we trust everybody working from home and remotely? Well, guess what? It happened this year, right? And we'll start to see a lot more for sure, I think.
we're ahead of the curve here in Asia. I mean, this is something we have guests always telling Michael and me that, because the COVID started earlier here, we're seeing that drive toward recovery faster here too. And so I think maybe the fruits of this IBM split will really be seen here, maybe first.
First and onward to 2021. That's the way it's supposed to go.
Yeah, we'll definitely have you back, Linus, to talk more about this.
All right, thank you. Thank you for having me.
Thank you.
Thank you, Linus. And
I see
thanks
Gina,
for
Michael.
Yeah, thank you so much. And thanks everybody for joining us on this special report. Yet another DevOps breakfast in the can. I'm Gina Smith.
I'm Michael Araneta.
See you next week.
Thank you. Bye-bye.